Welcome back. Getting a check in on the currency space to see how the Australian dollar is tracking against a basket of majors. As you can see on your screen, inching upwards, but still in the red against the greenback, sitting at 75.79. The Aussie dollar losing 2 cents in the space of just 7 days, but performing well against the remainder of that G10 currency space. Expected that the Aussie dollar could receive some support ahead of the RBA's meeting this afternoon. Well, joining us now is Tim Evans from Longleaf Trading Group. He joins us live from the CME in Chicago. Hello to you. Thank you so much for being with us today, Tim. Certainly keeping an eye on our own Aussie dollar today, it would appear.
That's right. Nice to be with you today, Natalie. Yeah, I mean, I think we're actually looking at a pretty good opportunity when we're looking at the cross rate between the U.S. dollar and the Australian dollar. I agree. I think we'll most likely see some supportive price action in the Aussie here following the announcement. And over the weekend we had some favorable news that China is going to be committing a substantial amount of money in large infrastructure projects that obviously has good benefit to the Australian economy. So on a comparative basis, I think the Aussie in the near and intermediate term should outperform the U.S. dollar.
We're also seeing, in the broader sense, we're seeing the US dollar index moving higher as well. We did see it hitting a session high earlier, in fact, just a couple of hours ago, indeed. Talk us through what you're seeing with the US dollar also.
Well, we have non-farm payroll number Friday. We also have Janet Yellen and Fed Governor Fisher speaking on Friday. Yeah, I think the market ultimately is, continuing to price in that there's a good likelihood of the Fed moving higher with rates here at the next meeting. We typically see pretty favorable price action as the market's pricing that in, barring any surprise that, the market begins to discount that likelihood. But, that hasn't occurred, and I don't really see any major obstacle into making that so here in the near term. So we're seeing some favorable price action. But at the end of the day, I think there's ultimately going to be a lid on the market, and that's primarily driven by fiscal policy or the lack of fiscal policy so far. So, I think the dollar's vulnerable here in the near term, and we're looking for opportunities to take advantage of that.
Well, you flagged there the US Federal Reserve also naturally keeping a close eye on that NFP data on Friday. I mean, could this be an opportunity for the bulls to jump in here?
My view is kind of to the opposite of that. I mean, I think ultimately if the market's getting dragged higher, as we're pricing in possibly a very bullish non-farm payroll number and, a stronger likelihood that the Fed will raise rates, I actually think that's an opportunity to take advantage of that on the sell side, because I don't see a dynamic move happening in the near term until we start seeing some legislation being passed that, carries out that Trumpflation idea that got the dollar, to the levels it got back in early January. So, and obviously that depends on what your view of the non-farm payroll number is. The market's expecting about 190,000 private sector jobs. I don't see anything that, convinces me that we're going to see anything really outside of that number one way or the other. So, that's the best route I see forward from here.
Well, if you're seeing possible moves to the downside when it comes to the US dollar, how is this being reflected in broader investor sentiment as well, particularly if we consider, some of the events since that US dollar peak in January, most notably the idea of Trumpflation coming through as well, alongside what is now emerging to be quite protectionist action from the US president.
Yeah. Yeah, I mean, look, we were expecting a lot. That market got up in the mid-January. We were pricing in all kinds of very bullish scenarios for the dollar, very pro-growth policies, corporate individual tax reform, the repeal of Obamacare, which they thought would stimulate jobs, big infrastructure programs, and you name it. The market kind of went ahead and priced a high probability that we're going to see some of those things. Obviously, we've seen none of that yet. And I really don't see any meaningful legislation that, could be passed really until next month. I heard Paul Ryan on Fox News last Friday, talking about Republicans possibly wanting to put the tax reform proposals that they have as part of the congressional budget. There's going to be a lot of, fight from the conservatives in Congress to allow that to go through. So, we're not sure, obviously, if that's even going to make it as part of the budget. But even if it does, April's the earliest we're going to see it. So there's really nothing that, the dollar can move on until that time. So, again, that's another reason why my view of the dollar is what it is.
In the last couple of minutes, comments coming through from U.S. Senate Foreign Relations Chairman Corker, who had been a critic of the first Trump travel ban order, saying he's very encouraged by the administration's approach in the new order coming through. So we are starting to get that rhetoric around the latest move on travel restrictions from Donald Trump. But I just wanted to look at, if we consider equity market action today, Tim, we are seeing a pause somewhat, certainly some marginal moves to the downside across those U.S. indexes. But if we put this in line with what we're seeing when it comes to the bond markets, U.S. yields very little changed, in fact, today.
Yeah, I mean, that's the one of the biggest, or to me, one of the most striking observations that I can make on the U.S. dollar. We've a lot of people have been focusing on the dollar and what the impact of Trumpflation is ultimately going to be on the dollar, but and also obviously raising rates. And the biggest moves or comparative moves we've seen are in the Treasury markets. If you look at the 2-year Treasury note, for example, and you compare that to its German equivalent, we're at 215 basis point spread. We haven't seen a spread like that since the mid-2000s. And that's when the euro was trading at 90 cents to the dollar. So the bond markets or the Treasury markets have really would have been the main benefactor of what we're talking about right now. The dollar's been, has had pretty muddled performance, to be quite frank.
We're seeing sort of some echoes to performance 2 years ago, really, in some of those Treasuries moves, both in the US and also in Europe. What does this mean moving forward, particularly if we do consider Friday's jobs number, as we flagged, next week's US Federal Reserve meeting? Where do you expect that momentum to keep moving?
That's a very good question, and I don't really have a good answer for you. Ultimately, what we're going to need to see is growth. We're going to need to see positive economic growth numbers in the U.S. relative to its foreign counterparts for the U.S. dollar to continue moving higher. You can look at it one of two ways. Either the dollar rallies or borrowing costs go up. Borrowing costs are what ultimately has moved so far. If borrowing costs continue to go higher and the dollar stays flat, then that's kind of pricing in that upward move. If we see Treasury markets begin to peak, that could leave that move to be had on the column of the currency side of that trade. How the market interprets that moving forward is anyone's guess. My view is that we're probably going to continue to see the Treasury space benefit moving forward.
So what are some of the sector plays then, or stock plays, in fact, Tim, that you're watching at the moment, or areas that you're advising clients to investigate a little bit further?
I still like the precious metal sector. I think gold is positioned to at least hold where the levels that it's trading and possibly go higher. Again, there's always, we're dealing with a lot of uncertainties. There's, all these things we think that are going to occur that have not yet occurred. There's been no evidence yet that, the Trump administration can get any meaningful legislation through Congress. Trump is pretty unpredictable as an executive, so you never really know what you're going to get there. So, we're going to most likely continue to see that premium in the metal space. The price action actually in gold has been very favorable this year. We've had a bit of a pullback late last week, early today. But I think that 1210, 1215 level in gold is an opportunity to, position possibly for a move to 1275, 1280 over the coming month.
Certainly the suggestions that while we have seen gold prices pulling back somewhat, in fact, towards February lows, they are remaining broadly in a bull trend. So certainly some upward momentum expected to continue there. Tim Evans, a pleasure as always to have you joining us today. Thank you so much.
Hey, thanks.